Welcome back to Verge News, where we bring you the latest updates on immigration, labor markets, and employment trends. Today, we're diving into some critical news from February 2025. A surge in U.S. job cuts that hit levels we haven't seen for this month since 2009. Joining me to analyze this is my co-host Michael. Great to have you here.
Thanks. It's good to be here, especially with such significant developments to unpack. February's job cut numbers are stark. 172,017 layoffs were announced, according to a report from Challenger, Gray & Christmas. That's a 245% increase from January, which only had 49,795 cuts. What really jumps out is that even compared to February last year, the numbers more than doubled from 84,638.
Right, and what makes this even more jarring is that this spike makes February 2025 the worst for job cuts in this month since 2009, when the global financial crisis led to 186,350 layoffs. It's a grim comparison, but it puts into perspective how severe these numbers are.
Exactly. And even beyond that, it's the highest monthly total we've seen since July 2020, which was at the height of COVID-19 related job losses. Back then, layoffs peaked at 262,649. So while February's numbers aren't quite on that level, they're unsettlingly close to what we only associate with major economic disruptions.
And the layoffs weren't evenly distributed across industries either. Certain sectors faced harsher impacts. For instance, government reforms and retail struggles were mentioned as key factors. It raises questions about structural challenges in these areas. On the flip side, other industries seemed more adept at weathering the storm.
That's a great point. Specific regions and states also felt the effects unevenly, highlighting how local economic trends influence these numbers. It's not just a national issue. Regional dynamics play a big role too. For businesses and workers, that variation could mean drastically different experiences depending on where you live or work.
Absolutely. And while this surge in layoffs does reflect broader economic uncertainty, it's worth noting that some parts of the labor market are showing resilience. For instance, hiring growth in certain sectors and relatively low unemployment rates provide a counter-narrative. It's a mixed bag, really.
It is. What's also worth discussing is the larger takeaway for workers and employers. For those impacted, this period might demand a focus on upskilling or shifting into roles that require more specialized expertise. Employers, on the other hand, are likely weighing organizational restructuring and the need for targeted hiring strategies as they adapt to these challenges.
And that adaptability is critical. As the employment landscape continues to shift so dramatically, it's a reminder that these disruptions can set the stage for longer-term transformations. Industries like technology, for instance, are rethinking roles and demands, which might redefine modern workforces entirely.
That's true, and it aligns with broader themes like how government efficiency programs, market shifts, and even reforms influence not just layoffs, but also hiring priorities. While February's spike is troubling, it's also a moment to take stock of how prepared we are for future economic shifts.
Well said. So as we look ahead to the coming months, staying informed on these employment trends will be crucial, not just for policymakers, but for employees and businesses alike. Understanding the full scope of this data can help as we all navigate these potentially turbulent times.
Agreed. The February numbers serve as a sharp reminder of how quickly labor markets can shift, but recognizing the signs of resilience, like sustained wage growth, offers some hope as we move forward. It'll be interesting to see how March and beyond play out.
Definitely. For our listeners, thank you so much for joining us today. We'll continue to track these developments closely for you. For more immigration and labor market updates, visit us at visaverge.com. Until next time, take care.